It's time once again for our weekly financial forecast. We have Tim Fitzwilliams of Fitzwilliams Financial joining us. We missed you last week, Tim.
Yeah, I was in Canada.
Well, listen, a lot of people are going on vacations. It's the summertime.
It is summertime.
We may have time to dig into that, but we begin today with a Virginia law taking effect tomorrow that will have a financial impact on the average Hampton Roads family. What's the law? What's the impact?
Yeah, so I think the major thing that I've noticed from the July 1st laws is this idea that if you're a small business owner and you have 5 or more employees and you've been established for more than 2 years, right? And regardless of the entity type, you now have to offer a retirement plan. And that sounds very simple in just saying it, but it's very complex and very regulated. And so that can be a concern for a lot of folks trying to set that up. That's not something you just try to Google and set up right away. There can be a lot of rules and there can be a lot of difficulties in changing those things after you set them up. But that's the law that's coming out. So if you're a small business owner, like you own a coffee shop or something, you're going to probably have to start offering retirement plans. And that 5 employees even includes part-time.
Yeah.
So that hits a lot of folks.
So that is the new law going into effect. If you are a small business owner, to do that efficiently and effectively is the goal. If you're someone watching who's not a small business owner and you want to support, perhaps go shop at a small business this weekend.
Yeah, absolutely.
Just to let them know you're there as they go through these changes. Now, something that's always on the mind of really everybody here, especially young folks in Hampton Roads, is buying a home. They continue to face relatively high borrowing costs, right? Now, should buyers wait for those rates to fall, hope that they'll come back down, or just take advantage of any opportunity that you have now?
Sure, and I think we need to kind of understand the backdrop and the story behind why that is happening. So let's look at this whole oil situation with Iran, right? So all these countries had U.S. bonds, and then they had to sell those said U.S. bonds because they needed cash to go buy oil. All right, so all these bonds flood into the market, which then the price of bonds go down. Bonds work like a seesaw. So when the bond price goes down, the yield goes up. And since the 10-year Treasury is how we look at our mortgage rates, the mortgage rate went up. Now, with that being said, we have some real interesting developments. One, the Iran situation is kind of settling out. 2, the U.S. is now 25% of the supply of the world's oil. So that's a big deal. And plus, other countries don't want to have to get back into an Iran mess again. They want to be self-sufficient, or they want to not depend on that country and those concerns. So with all that happening, we may see oil prices actually go back below the normal, which would also then decrease interest rates. So to answer your question, as far as home buying goes, if you believe the story that we're going to come back and things are going to be fine, then you should go ahead and buy now and not worry about it, because if it goes lower, you could refinance. And if you don't believe the story and you think that it's going to go up, well, then you should buy now anyway, so that way you can not have to pay a more expensive price in the future. We tend to believe that things are going to come back as we hit that economic hockey stick that we've been talking about, with market expansion right around the corner.
Okay, a fiduciary and a storyteller, Tim Fitzwilliams, here with us once again. He'll be back next Tuesday because the financial forecast airs every Tuesday in our 4 p.m. news. If you have questions you want answered, email us at financialforecast@13newsnow.com. Thanks, Tim. Back to you, Janet.